Bitcoin traded back above $82,000, leading many to wonder what's pushing price up and whether the bear market is finally over. But the real narrative in crypto right now is the tokenization of everything. We're going to talk about all that and more right now on the Daily Wolf. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I am your host, Scott Melker, also known as the Wolf of all streets. As usual, we're going to spend the next 15 minutes diving into the news of the day, but really today it's going to be the narratives of the day. Now, I'm live here in Miami Beach at Consensus, and the narrative right now, of course, not so much Bitcoin price, but the tokenization of everything. And when I want to talk about these things, I bring on my good friend Haider Rafique, Global Managing Partner at OKX. So first, let's talk about the elephant in the room, which is always price. Although nobody's talking about price here, interestingly, but Bitcoin back above $82,000. I mean, what do you make of the market and what's pushing it?
I think a couple of things. From my vantage point, I would say the fact that the Clarity Bill is back on the table is bringing a lot of enthusiasm and momentum back into the markets. People who were a bit bearish are now maybe perhaps looking at Bitcoin and the markets a little differently. We're also seeing a lot of inflow into the ETF products, BlackRock and Fidelity. So I think that's pushing the price up. But then the third thing that I'm noticing is that there's a subset of traders that were still holding bearish positions. And now it appears, are getting short squeezed out of the market. And that's, giving the Bitcoin price even more momentum upwards. And so I hope it sticks here, and I hope it continues to build from this position.
The ETF flows are interesting. It's kind of a chicken-egg problem that we endlessly debate. Do the flows lead the price, or are the price leading the flows? And also, where do you think the flows are actually come from? Do you think it's retail or institutional?
I think they're largely institutional flows, but there is a bit of retail in there. But look, I think when institutions learn that there's now a possibility of a market structure bill to go through, they built more confidence, and as a result, that shows up in their positions. So I think it's largely institutions who are going to come in and dictate the price, and then retail is going to look at it and follow.
I think it's interesting that Bitcoin price rises on Clarity when I think that the rest of the market is more dependent on Clarity passing than Bitcoin is, right? I think people are looking to see what's a security, what's a commodity, what can you do with altcoins.
It's very true, but as we always say, Bitcoin is the foundational layer of all crypto markets, so it's really the one that gets priced first.
So I think another reason that Bitcoin price moves, obviously, is on the words and actions of Michael Saylor. I actually had him this morning for a conversation that we recorded, but he kind of shook the world yesterday when in his earnings call he said that he would sell some Bitcoin or consider selling some Bitcoin to inoculate the market. That was the term that he put. Now, I talked to him and he said, just because we would sell some doesn't mean that we would not be a net buyer. I might sell one, but be buying 10 on the back end the same month. We'll never be reducing our position. I mean, what do you make of that idea? He's Mr. Never Sell, right?
I just hope that he MicroStrategy and him look at this very systematically over a period of time. I would hate to see too much consolidation of Bitcoin with MicroStrategy and their balance sheet. So I hope that they have a plan in place and they keep some of the supply in the market for retail to grab.
Yeah, and he, I think, also made the point, and I've talked to others about it, that when you have a security that retail is buying, which is what Stretch and STRC is, they need to know that it's fully backed and that the dividend's not going to go away and you're going to support it. So even the signal to the market that I have 700,000 plus Bitcoin that's unencumbered that I could sell a little bit of if we ever even came close to not being at par, that's the signal that maybe the regulators and retail needs to see from him. But
I think the markets will tell.
So what I found really interesting, and I think it's a great segue into the next conversation, tokenization of everything. Once again, people will be able to see this conversation. I asked him sort of about the future of STRC and Bitcoin, and he started talking about DeFi and tokenization and yield tokens, which was a conversation we'd never had. So obviously, the big piece of news you had recently was that OKX took investment from Intercontinental Exchange, which is the parent of the New York Stock Exchange. Huge eye-opener, right? $25 billion valuation. Congratulations on that, and a board seat. But I have to imagine that's not about money. That's a strategic investor that you're taking on for a very specific reason. So talk about, I guess, first that deal, and then we can talk about why and what it means.
Look, when we think about the last 3-4 years of OKX's journey, you can see systematically we've built in a certain direction. While a lot of venues ended up staying offshore, we actually committed to being onshore. So you now have a company that has multiple global licenses, a globally unified order book with really minimum to no slippage. And I think that is a direction we want to continue to invest in. Now, I'd like to think that crypto and the blockchain industry has this moment where they can really prove to the world that the systems we build have real world utility. And I think that's where tokenization becomes a really big opportunity for all of us, not just OKX. And that's why we partnered with ICE. You think about tokenization in a very simple framework. I'd like to think that there's like 5 core components. There is the asset layer, the issuance layer, the compliance layer, the liquidity layer, and then the distribution layer. Now the reality is not one crypto company or a traditional finance company can solve for the full stack. We all need each other to make this reality come to life. And what is the reality that I'm excited about? You look at the equities market today in the United States, it's about $69 trillion value. 18 to 20% of this market is foreign-based ownership. Can you imagine what happens when we tokenize these equities, bring it on chain, make it completely accessible to everyone around the world, and they're fractionally traded, and they're traded 24/7? I would argue that $69 trillion market cap for equities, that goes up to 100 trillion, maybe 150 trillion, and is driven by more foreign-based investors coming in and becoming investors in the equities market here in the US. It's incredible for the US economy. I think we should all be rooting for it. It's a tremendous opportunity, and I think when you look at traditional finance and Wall Street, they recognize it. They see that this is a big opportunity to bring in net new liquidity into Wall Street, and they're partnering with us with a sense of urgency to get it done. Now, it requires some regulatory approvals. We think we have the right partner with ICE and New York Stock Exchange to lead that. I think between the two companies, we have one of the most robust compliance systems that will come together. We have one of the best matching engines that will come together, and I think it will create one of the best products in the market for the world to actually see what tokenization looks like, starting with equities.
I think you're the first person to really articulate that to me, the access to the world. I think we talk about it generally with crypto, but we all talk about better, cheaper, faster for using blockchain rails for settlement, and it makes a lot of sense, obviously, to tokenize everything, but I never really even considered the lack of access to the US equity market to everyone in the world, and assuming they're able to access this
anytime. Now you have to question, why do people in Turkey have the affinity towards Bitcoin? Why do people in Brazil and all these markets have actually chosen Bitcoin as an investment vehicle? Well, one could argue that part of the reason is that they don't have a lot of choice. They have to look at alternative investment vehicles because they don't have a robust stock market or equities market they can participate in. And they certainly cannot participate in the American stock market. It's very cost prohibitive. There's a lot of local laws and red tape that do not allow them to onboard on US brokerage platforms. So I think once you make that product open and accessible, I would argue there will be less intention for alternative asset investment, and people will go into hey, I'm sitting in Turkey and OpenAI is about to go public, or the next big company is about to go public. I'd rather get exposure to that company. Or maybe I want to have more diversified exposure. I'll have a little bit of Bitcoin, a little bit of alt markets, maybe some gold and silver, and now I'm also going to have exposure to US equities. It's about as attractive as somebody sitting in Turkey and having the ability to buy a digital version of the US dollar and being able to move that around from country to country without having to worry about FX rates, without having to worry about high cost of settlement and slow speed. So these are the things that I think are really important for our industry today. We can get away from the very speculative cycle of instruments we've launched over the last 5, maybe 7 years, and I think go into things that are actually going to be materially meaningful for the world.
So from your perspective, obviously you basically said we do this deal with ICE, we're going to focus on the parts of the 2 or 3 pillars of that 5 that make sense for us, partner with people, put it all together. Once that's all done and everything is tokenized, even the DTCC and the SEC are saying that's happening, that's not a myth anymore. What does it look like for that person in Turkey with an OKX wallet?
I think anyone in Turkey with an OKX. Now, look, I'm giving Turkey as an example, but naturally, any of this stuff requires, evaluating local regulations and working with the regulators locally to make sure that these products can be lawfully accessible to individuals. But what it would ultimately look like is you'll open the OKX app and you'll have a tab in there that will give you access to American equities, and there will be 24/7 tradable. You can do fractional trading, and it's the actual underlying asset, not a promissory note. And I think that's what I also urge people to be very careful with. There's a lot of tokenized products out there, but they're synthetic tokens, not the underlying asset itself. And I think it's really important to educate the market on the difference.
But so now you're in the wallet, you can buy US equities, you've got your Bitcoin, you've got your stable coins. Will you be able to participate in the full suite of financial services that you could, for example, on Schwab right now? We'll be able to have yield strategies and options, and will it be a savings account that's yield bearing? What's the full promise of this? Because I don't think people envision what we're talking about here.
I think the vision is that, yes, you have an experience that looks and feels and operates very much like a traditional brokerage platform, but with a lot more horsepower. You have to understand the current brokerage platforms don't allow 24/7 trading. They're not on chain. They're not globally tradable. And those are the things that crypto bring as a strength, as an inherent strength. So I think the future of brokerage platforms will look a lot different than what we're used to today.
What does a traditional hedge fund or Wall Street institution look like when they're forced into what we've been doing for years, 24/7, 365? These guys are used to, weekends in the Hamptons and the night off. What happens when they have to be watching the tape all the time?
I have to imagine that they will welcome the opportunity, because volatility brings opportunity, and Wall Street cares about that. So I don't think this is sort of a deprecation to their systems. It's complementary. And we cannot do it without traditional finance. Traditional finance cannot do it without our engineering know-how.
So what product launches next, right? I think the first iteration of tokenization was stablecoins, obviously. Then we saw, BlackRock tokenizing BUIDL, for example. So basically treasuries being tokenized, the most obvious, boring, safe use case. What do you think comes next in that evolution?
I have to imagine that equities will be next, followed with some other commodities and futures products. But the first thing we need to do is going back to what I mentioned, which is the incredible opportunity for the American economy, which is taking the 69 trillion equities market and figuring out how we can take it on chain and taking that value, that total market cap, to 150 trillion, or maybe even more, with more foreign-based ownership coming into Wall Street.
You've been here for the whole process. Do you ever pinch yourself and in shock that now you're having conversations with regulators and governments and the largest institutions on the planet, instead of thinking about meme coins and NFTs and DeFi and the things you talked about, the speculative excess that we had before? I mean, you're really on the front lines here of these conversations.
Look, I might have a unique point of view on this. I think it's not to say meme coins were all bad, NFTs were all bad. These products helped us engineer core systems that will now lend into 24/7 trading, to on-chain trading and tokenization. But I am excited about the fact that we actually get to play in the same sandbox as traditional finance. We get to have the same seat at the table as them. And I think it's not about competition, it's about convergence. I think the two sides coming together will make more robust financial systems, more accessible financial systems, and less counterparty risk as we look to the future.
How fast do you think this happens?
Well, if it was up to me, I'd like to do it next month. But I think we have to go pace ourselves. We have to make sure that there's the right balance of market structure in place, so that we don't get ahead of ourselves and have events that take us back and create more sort of questions from regulators and skepticism. So I think it's important. I said this on the panel yesterday with the CEO of Securitize, Carlos, and others, that it's important to take the right steps and go slow, make sure regulators are comfortable, make sure we have the right risk systems in place. And I can tell you this, as great our engineering is at OKX, we couldn't do it without ICE, and that's what I'm really excited about.
You heard it here. The conversation right now is the tokenization of absolutely everything, and it's coming whether traditional finance is ready for it or not. We'll be back tomorrow with the next Daily Wolf. Peace.